following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. I'm going to get right into it here with gold. Hope you guys are seeing my screen. We're having a little bit of problem with the DIN this morning. I think it's good to go now. This is something we kind of avoided trying to short against this 1235.60. The dollar is looking a little precarious still to me. We may end up busting through these 99.60s. We're going to get the direct number on that in just a bit. But gold popping its head up above these weekly inflection points. So we talked about waiting and just trying to see what the dollar was going to do. Gold was really looking longish to me on a relative scale to other products, and might have been a little bit of a pass here as far as kind of trying to use this to bank a short trade against. The really good, powerful trade, just like we've experienced before on gold, is to kind of let it do its thing, look at some relativity. If we can get a traverse back below this weekly unfair low and get a close below that weekly unfair low, that would be just a very settling feeling. But if we get up here and close and at the end of this week, and then we kind of rattle around above it, we got to take a look at some other things when it comes to trading gold. But it's kind of a wait and see right now. Not super excited about getting long the thing, but just terrified to be short right now, put it that way. Let's take a look at the dollar. Excuse me. And as we talked about, we had a kind of a customary bounce here, but off weekly unfair highs. These are all within the scanner, but we came off of these targets on that little trade. I'm not exactly impressed with how it's acting today, even though we're kind of hovering around these unfair highs on the daily. I fully believe we're going to go back and retest some lower numbers on the dollar and maybe even pierce that 99.63-64 area. So that's kind of what the drill is on the dollar right now, which affects a lot of other trades out there. Let's take a look at the S&Ps. Let me show you something really cool here. Finally getting this to a situation that is palatable in my mind. Here's a new HTML5, kind of slimmer version of the scanner. And ignore these colors right now, but it basically puts opportunities right in your face. And as I was talking about the dollar, the dollar affects everything. It affects repricing of U.S. markets, be it commodities, some other currencies, stocks in general. But I'll go through this. I think we're going to have this kind of beta release this week. So I've been saying that forever, but I think it's going to happen this time. And Tom and I will be talking about that. But the dollar can affect everything you just saw on that grid and many, many more. So let's take a look at the 30-year really quick. Let's take a look at the 30 before we take a look at the S&Ps. So as you know, when treasuries rise, rates fall. The 30-year, I haven't been really excited about it at all. I still think you've got to wait until we get some kind of move to traverse into some inflection points that you can pay attention to. Here's the weekly on the 30-year, just literally no edge, in my opinion. I mean, we are smack dab in the middle here. I know we've risen a little bit off these weekly unfair lows and daily unfair lows, but, not a lot of power behind that trade right now. So talking about that, looking at the S&Ps, here's the daily. We had some indications yesterday. We actually closed negative breath on some short term. I'm going to pull up our scanner here. And let me get that up. have a mouse turning a wheel to operate this computer. Just reminding you. So the weekly still just incredibly powerful. But as I go into the dashboard and I look at some of the statistics, you know, we kind of rolled over, even though we closed up a little bit yesterday on the short-term breadth. We're probably going to open breadth negative here. The long-term breadth is still relatively positive, and there's not a lot of new profiles attempting to appear on the weekly to kind of put some new stakes in the ground on the new supplies happening on ultra long-term stocks. I want to, so we can get that to load, we'll pull it up. But looking at the S&Ps, you know, what do you do with these things now? I didn't think it was a smart trade yesterday to be trying to short off of 22.94. I'd really see some more indications, i.e. some of the longer term breaths starting to get a little concerned. You know, the best case scenario is to have a new profile appear on the daily and then have the breadth turn negative on the dailies while we're in the middle of that profile. And then I'd start looking at this a little bit more attractively on the short side. But right now, it's tough. I still got some puts out there, just lottery tickets, El Cheapos, but not too excited about this thing coming off. It's amazing how it's just spinning around up here after these moves up. That being said, let's go back and look at our scanner here, and let's take a look at the weekly breadth charts. Not a lot of new profiles attempting to appear here on the weekly. 25 stocks out of the S&P, only less than 5%. This is what I was referring to before. So, you know, there's not a lot of, you know, indications that things are starting to get a little heavy here. And here's the daily. Only 8 stocks yesterday closed with new profiles attempting to appear. So these numbers aren't going to really change a lot right now. We might have this kind of open up around 14. So just keep my eye on it. Not, again, piling into shorts right now, but don't really see a lot of reasons to go long. Also, if we get down into 79, 75 on the S&Ps down in here, 75 to 79, it's kind of a little bit of a support area, and our daily breadth is negative, then, you know, that's going to be a pass on buying support here, because I think we can go lower, because a lot of the stocks are saying we don't want to cooperate here, and we're starting to show some cracks in the armor. The VIX, I'll tell you what, I'd love to hear Basil's thoughts on the VIX, and if I invite him to always call into the show. You know, just scarily cheap. I mean, this is something that actually puts a little bit of a short in my mind on the S&Ps. But again, it might be better just to play that long-term VIX trade and just, again, buy some lottery tickets. It will happen at some point, but it's a little easier to trade this than to try to put on shorts and get stopped out in the S&Ps right now. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And just to hit gold again, if you missed the opening, just staying away from this right now on the short side. Talked about that. Just passing on that massive move up from where we'd started talking about this around 1148 on the long side. This has been a decent little move here, but we're going to kind of wait until the dollar figures out what it wants to do before taking a look at gold. And talked about possibly reversing back down below 1236 will be the cool scene on this product. But oil, has broken down below where I had some stops on it and was just trying to continue to trade these bounces above 52.32. The dollar coming off again may give this a little bit more hope, but right now that's what stops are for. And if you look at that gold situation relative to the oil situation, it's, again, you're trying to let things breathe when you have the power behind you and the probabilities behind you. And when you look at something like this down here, get that indication, new profile, stake in the ground, off to the races, trying to block out the short side up until recently. That's called risk rewards. Let's take a look at some things that were posted in the den. I haven't been bullish on grains in forever, but I did buy some lottery tickets. I talked about this last week. I think when John from Philadelphia called in, and we had a good laugh about that because I haven't really been super excited about being long grains in a long time. But as we look at this, and we're going to take a look at, I think it was, I'd like to take a look at wheat again. I don't think he asked for that, but so we got a little bounce in beans, and I took off some here at 1046. The call, they were just calls, but having some still left on and getting possibly a close back in the daily profiles here would kind of give me reason to believe that then 1046 could be used as support to complete this all the way up into 1064.65. I don't know if that's going to happen, but it kind of looks promising that we've dived back in the balanced area on the daily, and that's a pretty serious deal there. All right, CMH7. This is soy meal. And again, I didn't look at this when I was looking at the bean trade, but this is a pretty attractive situation always when profiles appear below price action like this. So when you have this happening and you have price above, this is a pretty bullish sign. This has been a decent looking little scene here. I don't follow meal as closely, even though some folks around here, obviously that feed a lot of hogs, turkeys, and chickens, follow it extremely closely. You know, I think the bean trade's got a little bit more in it. That's why I left some contracts on. I think we could get up to 1060 and some change up there on beans, and then meal is somewhat correlated to it, of course. The 341 is going to be a big number on meal. It's going to have to get through. What month was Kansas City wheat on? May. Daggone it. Trying to figure out, remember what was the symbol on that? KE, that's right. On these signals, it's a little different. Okay. Yeah. So we were looking at this the other day as a really kind of sea change event almost. And it was the same type situation that we just looked at on soy meal, the same concept actually. And I think that this one is, got the fives and higher in it. Ultimately, I mean, it's not going to be like a straight painless move up. It never is. But I think you've got a lot of things on your side here. And John from Philadelphia picked this out, and then we looked at it technically, and I was like, wow, this is great for everybody in the den to see, because we get down here, we reverse. This is our long-term weekly, by the way. We get a profile appearing below price action when this opened, just kind of like that soy meal, did a little dipsy do, and now you come back and kind of retest it this week. I see this as a pretty high risk reward situation. Stops below 440, of course, based on your appetite for risk. Give it a little room, maybe like last week's low. But I think this thing could have a lot higher potential in it. And I'm not even looking at the lower term time frames on this. I'm not trying to clutter my mind. This is one of those things. I don't know if you remember, we were talking about the Japanese yen down at like 103.5. This is one of those situations in my mind. We could get some, massive momentum on this particular product. And it seems like, those news events, I don't know. I mean, I hate to use the word feel, but I don't know, if those will be very impacting on the downside. I mean, I think you've just put in a good floor. A lot of, bad things are kind of baked in the cake on wheat, and any type of news in my mind that is not with the, downside or downtrend type attitude is just going to have some people running for the door covering. And that's kind of the situation you want to really be in. And if you look at this, we haven't really had any technical damage. And let's go back to, this is Kansas City wheat. Literally, if you can believe this, July of 2015. So now this is the first time we've broken above profiles, and now we have a profile appearing below price action. I hate to get so excited about something, but this is one that, keep this one on your radar screen. If you've never traded, Kansas City wheat, trade it lightly if it's something new to you. But man, this is a decent setup here. But this is, looking at this is a decent technical setup for anything that comes into this type of realm. Technically, it's not just Kansas City wheat. This is just a great technical example of something that has technically broken relative to these profiles. Let's switch gears and let's take a look at the bane of my existence, Apple. All right, so we've been talking about there's for a while. Didn't get long this, shoulda, but hadn't had any reasons to get short. We talked about getting a weekly close a long time ago below 114.82 for that powerful kind of reversal. That never happened. Never got short. It's still not a reason to get short. It's not too high. Here's the 240s regulating this trade up. It's just stay away from it on the short side. Apple's continued to go higher here. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're finishing up with Apple, just talking about there's just no technical reasons to look at this from the short side yet. When it happens, it's going to happen, but let somebody else figure out the high print. I'm usually the one buying the high print, me and Larry Pesavento, and selling the low print. Let's take a look at overseas a little bit here. Shanghai, you know, we talked about this yesterday. Sorry, wrong product. CSI 300. Here we go. Talked about this yesterday. You know, support 33.27. We're kind of rallying back up again. I still think we've got a lot more upside in this. I mean, getting a massive move today in it, actually. I think we're just going to blow through 33.96, 3,400, and I just don't see that not happening. I think they're going to play around with the currency a little bit too and kind of force that to happen. We're doing some work for a guy over there right now on China A-share strategies. Let's take a look at the 10-year, kind of similar to the 30-year, just coming up into an unfair high here on the daily. I don't see a lot of edge with this product or the 30-year, so we're just kind of giving you updates on it. Nothing to write home about. We looked at oil earlier. I want to take a look at the Nikkei really quick. And we talked about a possible bounce off these unfair lows around 18,893. I want to reference the yen again really quick before we talk about that. And the yen, still think it's in, trading opportunity mode here, but I got to put the stops in. This was kind of the back the truck up situation that we had talked about before. 111.67. We're trading about 111. What? I think we've hit a low 111.59.56. So not exactly bouncing here, but still kind of need to blindly kind of look at that as a decent bounce opportunity, in my opinion. Let's take a look at the Nikkei. So if we get a devaluation in the yen, we're probably, this is a relatively stronger looking situation. I like this actually, rather than trading the yen outright. So stops below 18,893 on the Nikkei based on that. Let's take a look at a couple other currencies, and then we're going to hit some stocks that were in the news and look at some scanner picks. All right. So the euro, talked about a DMZ little support area from about 106 to 106 and some change. Still liking that trade, still liking the dollar coming off here. The pound, okay, so I like this trade now. I like how it's reversed back in the profile. I like how it's gone up and retested this area around 125.39. The only thing in the way here is the dollar sells off a little bit. This could rally. I like the dollar trade a little bit better. So we're going to have to wait and see on the pound there because of that. The Australian dollar, just to give an update here, I still like this from the long side. I like buying support on this product. We've kind of used last profile support around 75.94, targets up top 76.96 right now on the Aussie. All right, a couple of stocks in the news. Yeah, I've been watching the local Buffalo Wild Wings restaurant, club, whatever you want to call it. I think it's kind of getting tired. I don't see I know this is crazy to try to gauge how to trade a stock, but just haven't seen people clamoring to it as this new cool thing to go to. And I think this thing's got a lot more downside fundamentally, just my own little 2 cents situation there. And yesterday looks like we're open here, but 144. So trading now below the break point here, 146.85. And I really don't see a lot of people trying to pick this up on sale. So if you get any types of bounces this morning into 146.85, please sell them and please put stops above. I think this technical damage, especially in a market that's just spinning around near the top, I think you got a little winner on your hands here. And any types of rallies, you just do it, put the stops in, see what happens. Yeah, no, that was my idea back in the 80s, David White. I was thinking, man, it would be cool just to have a store that only sold wings. I love wings. Everybody loves wings. They stole my idea. It was one of many. Let's take a look at a couple other Wingstop's got it licked, though. I don't know if you've been to a Wingstop out. I mean, I don't think they have them around here. I was in California. You just walk in. It's kind of the Chipotle or CMG model. You walk in, get what you need, give it to you. Boom. You're in business pretty quick there. Decent price. Disney. All right. Looks like we're printing this morning, 109.19. So here's the situation on Disney. Looking a little precarious even after the earnings, still trading below these profiles here. You know, do you sell a strong stock that's, you know, kind of been outperforming the market? That's the tough one. I think you got to wait and see where it closes today after these gyrations yesterday after the close. So I think you just keep with Disney on the radar screen. Now, the ultimate cool thing that would be cool to happen here, this is our weekly. If we started flashing the chance of a new profile that would possibly be enforced next Monday morning. So I think this is a wait and see. I wouldn't. It's kind of tough to short that stock right now. GM, and tough to buy it. Okay, General Motors, 35, printing about 35 here. So here's the weekly. Yeah. So I think bare minimum right now, you just leave this thing alone. I don't think it's an on sale situation or a sell. I'd like to see where it closes today. If we get a close below, if we get a close below 35.41, that's going to be pretty cool. We're trading, looks like we're trading, okay, 35.08 right now. So yeah, getting a close down here would be pretty cool for shorts, but I'm not exactly too excited about shorting this one. Gilead, if I could spell, that'd be good. GILD. Here we go. We're going to take a look at this stock when we come back, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Taking a look at Gilead right now. This stock is trading 68 after the earnings, and you never know how the earnings are going to go. But you look at a stock like this. Some of the healthcare stocks and biotech stocks and all that have had some bounces lately, especially after the meeting with Trump, just to allay some fears. But you look at a stock like this that hadn't really been participating, and then you got earnings coming out. Sometimes you got to just figure there's something to stay away from and not trade through earnings. Something's wrong here, as opposed to like that Kansas City wheat type trade, which it shows some really good technical reasons to nibble on something that has been in a downtrend. This one just nothing doing here, and then all of a sudden you get this slam. And if some people are holding this, it's like, do you double up, do that dollar cost averaging concept that they talk about on TV, where everything works out in the end, and you doubled down and tripled down and quadrupled down? Stay away from doing stuff like that. I think you just get out of this thing if you've been long. I mean, just it can go lower. I mean, and if it rallies, again, you've got a stock that's been underperforming. This could be something where it finds buyers, but I just think sometimes it feels good just to get out of something that's a nightmare if you've been long it, and just kind of reassess it. If you have to buy it higher again, you have to. But there's ample opportunities looking around, the S&P 500, the NASDAQ 100 within the scanner, just to find better opportunities to play around with than trying to catch a sword like this. So one of the things somebody asked me to look at a while ago was Apache Corp. And what I did is I'm in the scanner. So I'm like, okay, well, let's just look at one sword here, uptrend support. So Apache happens to be in that scene because it's meeting that criteria, pulling, arrow up, been in an uptrend relative to profiles, but pulling back kind of to Custer's last stance here. So let's pull this up. There's the daily, here's the weekly. So if you look at this, I mean, looking at Gilead relative to something like this, in my mind, you've got pretty much better defined situation. And let's look at Apache APA. I don't think it's open yet. Oil's coming in today a little bit. And Apache, looks like it might be a real print at 56.56. So the good news on Apache is relative to like a Gilead, you've got a chance to play defense here, and you've gotten a really good pullback from around 70, 56, but you got something to really, really play defense here. And if oil continues to tank and this thing hangs in there, then you start getting a little maybe a little bit more position on it. And again, keep the stops in, but this is one where you got to look around a little bit relativity situations as much as you can. And, if the dollar comes off of that 105 or 150, whatever it's at right now, you could be, and it looks like it's coming out just a tad here this morning. We talked about that being a chance to short it down into that 99.60 and some change, stops above there. That's going to help oil a little bit, and it may help Apache, but just keep your eye on that one. It's something really good to keep on your radar screen at bare minimum. A couple other stocks, and to be honest with you, I'd rather look at downtrend resistance. So the stocks in the S&P 500 and the NASDAQ 100 that are meeting downtrend resistance are nice little situation here in CERN. Basin stops above 53.84 might be something to put on your radar screen on a short side as Apache is on the long side. Let's take a look at Electronic Arts. There's the daily here. Not exactly been the darling of the XLK. Little bit of a chance for a trade there on CERN. Lockheed Martin. I actually like this trade a lot. Stops above. Hasn't really participated lately. Could have a situation where we could sell off here, but stops above that 257.48. Newmont Mining. Let's take a look at this one. Yeah, this one I like a lot actually. NEM coming up into these completed. It's kind of like gold. Kind of completed that whole cycle up. Not stretching past this 38. Take a look and see how it opens this morning. Let's take a look at NEM here. But again, I'm picking these out on the scanner instead of getting glued in to a Gilead or something like that. That just you're in no man's land. Kind of like Apple too. I mean, there's no way to trade that right now. There's no reason to take off longs if you've been long, by the way. But we've been blocking out the short side on Apple. So Newmont Mining. Let me see if this is real. 37.69. So this is Newmont Mining on eSignal. Looks a little bit better than our charts. But I think you've got a decent little opportunity here on the short side. NEM. Gold turning around and getting below. What was that? 1236. Gold reversing and getting below 1236 would help that, obviously. A couple of stocks in the news. Supposed to type in KORS, not HORS. Not horse, course. All right, so this has not been one of my favorite stocks, and lo and behold, we got the flush. So again, these are stocks where something is wrong, and then you get the earnings, and it's like, bleh. But technically looked like crap before that. So you at least stayed away from the long side before the earnings, hopefully. MDLZ. Looks like we're printing 43.50, so yeah, I wouldn't play around with this one either. No edge there. All right, we're going to take a look at something else in the scanner here really quick. We're going to look at some stocks. I'm sorry, let's go back to the dashboard. Some stocks that were breaking down. So yesterday I was looking at the I look at this at the close because everything's, closing prices are a big deal. That's just end of the day. This is where everybody decided the price should be. So we had some breakdowns here and we had some breakouts, and these are all relative to what's going on with weekly and daily profiles. So let's look at breakdowns. Had some decent picks on here the other day. Kimco Realty has been kind of the gift that keeps on giving here. We talked about that, talked about laying shorts to this below 25.21. I really don't know where the bottom on this is. This thing could go a lot. We'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. I was taking a look at some stocks out of the scanner, WFM. We talked about this the other day. Just continuing to move down here. Talked about staying away from this one. Ugh. All right, so now it's just kind of really putting some stakes in the ground as far as technical damage here. Let's take a look at DuPont. This is one, we had that move up, and we talked about, let's kind of wait and see where the, kind of pull back to support here. This is our weekly. Let me make sure. Yeah, this is our weekly here on DuPont. So we had a really good pullback into that DMZ on the weekly and daily on DuPont. Still not opposed to buying this. This is probably do a little pop here. Just trading opportunity. Could go back to the highs. Let's kind of recap. Take a look at the S&Ps. Not a lot of direction here. here's the 240s. This is really the only thing you can even look at here. You got 2279 and 2276 down here. Daily for highs, weekly, or excuse me, 240 for lows. There's not a lot of edge here on the short side yet. If you're thinking about that, I'd love to see some of the internals change. Dollar, still feel like we can come back sub 100 on this. Start testing some folks' nerves on the long side. Oil, kind of a no trade right now. Gold, just sitting tight. Can't sell this yet. And I'm not interested in going long. It was just a pass on the 1236 area on the short side. Beans, gloriously moving up. 1064, 1065 is going to be a big number on March beans. Now your new support on that's 1046, 1047. Copper, we're going to hit this again. Kind of a no trade on copper right now. Going to hit the currencies really quick just to give you a bearing on some things going on today. Australian dollar I like from the long side. The yen is actually bouncing now. Well, no, it's bouncing a little bit, put it that way. 111.67.60. I think you still got a good trade on here. Stops below. You just got to take a shot there. I don't like how it's kind of hanging around down there and not moving away from that inflection point after hitting it. Canadian dollar. So here we go. Not exactly excited about shorting this one either, even though it's kind of coming off some areas there. The euro, kind of looking at this for a little bit of a bounce right now. Stops below 106 based on your appetite for risk on the euro. A couple of stocks we have to look at. Amazon, we're going to revisit this after the pummeling it took. It's not coming up. Let me go to the other server. Oh, here we go. So, talked about it being difficult to short this, even though, we've had some, I guess, unsettling news for stockholders. Talked about waiting and trading on the long side until we get back above 808.96, 809. That happened yesterday. Had a decent rally in it. So opened up, consolidated, and moved higher. So tried to block out the short side on that one and just trade the long. This morning looks like we're printing about 812. Whew. Guys, stay tuned for Larry. You'll thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.